This is Vishal from Uncharted FX, and I wanted to speak a bit about the appointment of Judy Shelton to the Fed by President Trump. So I just want to talk about why I think this is important or significant. First of all, the media keeps talking about how she's one that favors interest rate cuts. So if you've been, following the news and following the economic news and, well, even President Trump's Twitter account, they talk about how, President Trump talks about how if rates were cut or even at near zero, the Dow would be maybe like 10,000 points higher. There's this pressure by President Trump to tell the Fed to cut rates. And again, it's a bit odd because, on one side, President Trump keeps talking about how it's the strongest economy ever. When an economy is strong, you naturally hike interest rates to cool it off. And you cut interest rates when it's slow, right? You try to make access to credit easier so people will borrow money and spend money. And, there's two different tales going on here. So if you follow my work, I believe it's because, central bank policies have pretty much failed. When we tried to normalize interest rates, we really couldn't get past 2.5%. And you could see how much problems this created. As people go in more debt and as governments go in more debt, they need interest rates to be low in order to finance that debt and have more access to money. So I was talking to a friend about this, but mainstream media and financial media, how they play this off is they say that the U.S. consumer is expanding their credit, right? So that's what they say. Consumer credit is expanding. In that type of rhetoric, it sounds positive, but they can't say consumer debt is rising. Right? If you put that type of connotation or use that rhetoric, it sounds more negative. So this is how they've been trying to maintain the confidence by saying consumer credit is expanding while it's, consumer debt that is rising. But they really can't talk about that. So that's the number one thing. She is really into cutting interest rates. And as I said, you're seeing this back and forth, almost good cop, bad cop between the Federal Reserve and President Trump. And, let's just quickly take a look here at the stock markets. As I am recording, Fed Powell or, Chairman Jerome Powell is going to speak tomorrow or testify. And everyone is waiting to hear about the rate cuts. There's this NFP, so the U.S. employment came out and they talked about how it was good jobs, but it was just one data point. All the other economic data that's been coming out has been not encouraging. It's been indicating some sort of slowdown. So I've argued that the Fed may have to cut more than 25 basis points. And, this move is probably expecting a Fed 25 basis points, and you're seeing a bit of a pullback here. I think it's more just to do with, after you break, a calm retest, so we'll make a higher low before we break out. But it really is what Fed Chair Powell is going to say. He is expected to cut rates at the end of this month. So let's see what he says. Is he going to signal a bit more or just 25 points? Does the market want more than 25 points? If you look at the bond, it seems like it wants more than 25 points, the bond market, sorry. But I'm not I don't think he'll do 50 this month, 25 and maybe 25 the next. So it's a wait and see. So, the Fed is going to cut rates. So I think Powell's job will probably be secure. And again, this is all because I believe the Federal Reserve and central banking mandate is to keep assets propped up. The European Central Bank essentially said that they're going to do some more easing and, basically keep this cheap money coming. And other central banks are going to be following pretty quickly, it seems. Okay, so why is Judy Shelton, why is her appointment to the Fed more important? I think it's more important because she is a classical economist, especially, in the Fed. There's a lot of Keynesians. So Keynesians is like the modern term for mercantile economics, or it's a school of economics. So it's good to have a variety. The Keynesians have dominated pretty much academia, in universities and stuff, and have pretty much dominated the central banks of the world and the banks. So she is a so she's a classical economist. And what do classical economists favor? They favor low taxes and hard money or stable money. So if you read this, she talks about, why she defended her position on gold, because the Keynesians, again, they think gold is some sort of ancient, relic. You can see that Trump tried to nominate Stephen Moore and Herman Cain, who also were gold standard advocates, but that didn't really go through due to personal issues that were brought up to the media. So again, I think it's important because she is a classical economist. You don't really, they call her a conservative scholar here, but the two schools, again, classical economists, they favor hard money. So what that really means is stable money and low taxes, while the mercantiles, what we call the Keynesians, they favor they have to favor high taxes because they favor soft money or fiat money, which means that money that can be devalued by the government. And why is that important? It's because they want that in order to pay for longer wars, which they might need. They'll pay it with cheaper money, and also for their big programs and social programs, and that just makes government bigger. And the Keynesians say, don't worry, just tax and increase taxes more and you'll make money and the government can keep spending. And they don't really focus on the productivity. It's all equations and numbers for them. But that's the two schools. And if you look at human history, there's always been a cycle between classical and mercantile and what we call Keynesian economics today, right? So the last abandonment of the classical the economic theory was in 1971, where Nixon took us off the gold standard, and we've been pretty much in a mercantile system since then. There was a bit more in the early 20th century. There were some experiments also with the mercantile economics. So, the Soviets, the communists did that, and a whole bunch of other nations as well that you can read up on. But again, human history is just a cycle between hard and soft money. And what happens is these Keynesians or the mercantiles, they always say the gold standard fails because it doesn't make money. You can't really devalue it, so you can't spend a lot. The only way in a gold standard that a government can really make more money is through income tax, and generally you see that when in a gold standard, when a country went to war, they would have to pay for it with the income tax. So that's how the income tax got invented. And then you have examples where Britain, again in the Napoleonic Wars and the World Wars, they suspended the gold standard so they can go back to soft money in order to devalue their money and print money to fight longer and more prolonged wars. And what did that lead to? It just led to much more terrible wars and much more suffering. So again, we always revert back to a hard money, or gold in this case, right? There's never been a soft money or a fiat currency that's ever survived in human history. I don't think the Canadian dollar or the American dollar will be the first, but the Keynesians think they can control this, and they believe they can find ways to, keep this from collapsing, I guess, right? I think I heard like Australia's never had a recession for like 20 something years. And the Keynesians, they say it's due to their policies. But again, if you look at Keynesian policies, they can never admit that they're wrong. What they do is, okay, you know what, we didn't cut rates enough. We have to go negative. We have to go more into the negative. We have to print more money. We need more government expenditures. So, it's just more and more of the same stuff. And they just can't admit that maybe their policies failed. So again, I talked about why governments like soft money. It's because they can devalue it to pay for longer wars and also to pay for large social programs. And, it helps the politicians, right? Because then the politicians can devalue money in order to get their platform across. And what has this led to? Mercantile and Keynesianism, it leads to bigger government. And that's what it is, right? It's almost as if there's an alliance between the big government and the Keynesians. Again, Keynesians is what you learn at university, post-secondary, about economics. They don't really teach about classical economics, or even the Austrian school of economics, which is a bit more of a social science. It looks at economics as a social science, looks at productivity, looks at people and their interests and benefits. So a really great book, again, Economics in One Lesson by Henry Hazlitt, gives a lot of great examples about this, and yeah, highly recommend. So again, I believe we are ending a cycle of soft money. You can see that there's also social, political, even economical issues that are sort of happening all at once. And when you read history, you always see this type of things happen. When we go to soft money, essentially some sort of decadence and government power. Governments are trying to get more power, trying to get more powerful. You see a cycle of decadence, like I said, in society, and this generally leads to some sort of collapse or reset. And it seems like we are near that type of situation. I'll talk about it in another video, but I'll talk about what I believe the governments are going to do. So there is this issue. We can go back to hard money, which is probably the better way to go, or we can kick the can down the road, keep building more debts, keep inflating, and pass the problems on and face an even bigger problem later on. So again, the thing about the gold standard, a lot of people have these misconceptions. They think that in a gold standard, you have to, and what we'll do is we'll look at a chart of gold while we're talking about it, just a nice background. But the thing about the gold standard is a lot of people think that your currency has to be 100% backed by gold, and a country that has more gold can print more money, but that's actually not the case. There's never been a gold standard that has been 100% backed by gold. What the central bank does is they can hold a certain reserve in gold, say even 1%, and the other percent, 99%, can be government debt or government bonds, right? So that's this is just an example I'm giving. And if the bank needs more gold, they'll sell the debt to buy more gold. And again, what does the gold standard do? It brings confidence back into the money supply. Not only does it make it tough for governments to print and all that kind of stuff, but when I say it brings confidence to the money supply, essentially it holds the government accountable, because if people do not trust what the government's doing, what they can do is they can exchange their fiat into their paper money for real gold, and that's basically you're holding the government accountable. You're telling them, hey, look, I don't like the cash that you have, so here I want to take give it back to you and take some more gold. And again, when that happens, the central bank has to pay out gold and buy back the extra or the excess money supply. So again, it's a way to hold the government accountable. And if you look at what's happening right now, you hear these stories about central banks buying tons of gold, mostly the Eastern banks, but there's even a couple of Western banks as well that are doing it. And I think, you should pay attention to that because that's what they are doing. It might not be what they're saying, but they are doing it. And maybe these guys know that we will be reverting back to this, because it is what works. Again, in human cycles, we always go through hard money and soft money, and generally near the end of some sort of decadent cycle or whatever, we go back to hard money. So, just a big speculation, but what if President Trump fires Jerome Powell and installs Judy Shelton? I think, I've said it before on my blog and all this stuff, but I think whatever nation does that, establishes hard money first, will do significantly well. Again, it will lead to a bit of a deflation, because money, everything, it's sort of a reset, right? Interest rates will probably go back up to 4 or 5%, and things will be reset. So, there's going to be pain when we switch, but they'll even be paying if we stick with the other method, which I'll discuss more in another video. Of course, it's about MMT and helicopter money and that kind of stuff, which requires probably a digital currency because government will have to tax much more and will have to track money flows. So, I think this is significant. It doesn't look like Fed chair will be getting fired though, because it looks like he's in that position where he will be cutting rates. Let's see though, maybe the job is getting to him. He doesn't seem, as he used to be. He is probably, as of recording tomorrow, as I said, is his testimony. So he is probably reciting his speech right now in front of the mirror, making sure what he says will be stock market positive. And, it's a tough job right now, especially during this time. So again, that's all I want to leave you with. Again, I think this is could be important because, as I said, we perhaps are in the end of a cycle where we will be reverting back to some sort of hard money. Or, as I said, if we do the opposite, it's the Keynesians want that MMT and all that stuff, which just makes bigger government, more, tyranny, more authoritarianism, less freedoms, digital currency. So those are the two ways that we should go, or we will be going. So let's hope it's the gold way, the hard money, where we revert back to it. And maybe, Judy Shelton getting nominated, and she is the one that actually got onto the Fed. The other, President Trump's other two nominees were also hard money advocates, but they didn't make it onto the in the Fed. So this could be, a positive sign, I guess, or something just to keep an eye out on, because, as I said, I believe whatever nation goes to the hard money first will do quite well. There is that big topic though about Fort Knox in America. The US has supposedly the largest gold reserve in the world, but there's never been an audit on Fort Knox for quite a while. We do see people like Steve Mnuchin, all those guys, bring out a bar of gold here and there, but we don't know if the gold is still there. Did they do what the Canadian government did, where they sold off their gold reserves to make money in order to spend, to fund social programs and government spending? Did the Americans do that as well? So that's also something that will be interesting to watch. So that's what I have to say on gold. If you do like my video and like my content, please like the video. It helps out a lot. And also subscribe to the channel.